Good day, everyone. Before we proceed, I want to say that this is not a financial advice. I am only analyzing QQQ to share my entry and exit strategy. Please do your own due diligence before you buy any financial asset. Thank you. I'll be using QQQ to make this analysis. If you are not very good at selecting the stocks, for me, I prefer to do QQQ and SPY because this is the index, which is the ETF, the index ETF. It is not affected by individual stock news, which, for example, they can tell you, oh, Microsoft is going through some legal issues. Those kind of a thing wouldn't be happening here. That is why I prefer to trade this ETF. I select the stocks for a long time, but for trading, I like to do the ETF. With that being said, my friend said I should tell him the indicators which I use. I basically use 3 indicators: moving average, volume, and the RSI. I use my moving average for the direction of the market. I use my volume to check if the institutions are buying or the retailers. And I use my RSI for strength. I also use my RSI for exit. With that being said, let's proceed. The reason why I have these drawings here, these boxes, is my institutional buy zones. How do I identify my institutional buy zones? First of all, I look out for the volume. You see the volume here, the volume spike. You can see the volume spike here. Also, the volume spike on this one. I already marked this one. This one, the volume didn't spike that much, but it caused a break of this structure. It caused a break of this structure, which led the market to go up. Same on this one. This one caused a break of this structure and led the market to go up. Same as this one. It also caused a break of structure. When the market went up, it drew back to get more liquidity and then continued. If you had watched me, I will always tell you that before I trade, I always ask myself, where am I in the market? I normally go to my weekly to find out where I am in the market. Now I can know that I am in level 1 of the market, so I am expecting the market to pull to this 50 RSI and we can continue our level 2. I also talked about when you come to this, let me draw this for you. When you come to this daily, let's expand this on the daily. When you come to the daily, so this is all you can see on the daily. That is what happened on the daily. So let's see how far the market has gone. I told you that the market has gone on that. This is on the daily, okay? Level 1, we had a rest. Level 2, we had a rest. Level 3, we had a rest. Level 4, and it was still to pull down or to correct, okay? And I said, if we have gone this far, that the market is exhausted and we should be expecting a pullback into the 50 RSI of the weekly. This is weekly, of the weekly, that we should be expecting, which will coincide with this 20 MA, this purple line, this 20 MA. Sometimes it can actually get to the 50. If it pulls down more, it can get to the 50. But just know that we are exhausted on our daily levels because we have gone level 1, level 2, level 3, level 4. this thing that happened here, you can see it because this market is always repeating its pattern. You can see it on the weekly. Let's go to the weekly here. This weekly, that is from 30th of March, no, 23rd of March up until that is 23rd of March 2020 up until around 15th of November 2021. You can also see that we had similar move, but this is on the weekly, where we had level 1 had a rest, level 2 had a rest, level 3 had a rest, and then level 4. Okay, they decided to pull down. Okay, so you can see that level 1 longer than level 2, level 2 longer than level 3, level 3 longer than level 4. Kind of it goes to this level and then get exhausted. But this is on the weekly. If you now come on the daily here, I said we have already exhausted, that we should be expecting a pullback. So now I know that I am on level 1 on my weekly, so I should be expecting level 2. So if I'm expecting level 2, I can actually do DCA, dollar cost average, when the market is going down. For example, the market now that is going down, let me go to the drawing board. First of all, just look at it very well. You can see that our 10 MA have already crossed our 20 MA and crossed our 50 MA. So our 10 MA now will be providing what they call resistance to this pull down or pull back. So it will be supporting or providing the resistance to our price, thereby causing it to be going down. We have already broken into this. Now we are in the bear zone of the RSI. Below this 50 RSI is the bear zone, and above the 50 is the bull zone. So now we are on the bear zone. So what we should be expecting is like this moving average will now be acting as a resistance. So what are we looking out for? We want these boxes where we have drew. When the price comes there, if it can consolidate and break above this our 10 MA. Let me go to drawing board. Let's assume we have our 10 MA like this. Let's say we have our 10 MA like this. Okay, then we have our 20, also 20 MA, and then we have our 50 MA. Okay, so what we are expecting is when the price has already come below this 10 MA, 10 MA starts to act as a resistance to it. If I want to do my DCA, because we are on level 1, about to start our level 2 for the weekly, what I'm expecting is if this breaks above this 10 MA, I will buy my first entry. I can say, okay, I will buy my first 30% here. So even if it fails and come back again, I'll buy my second. Okay, my second entry here again. I will sell my first one. Okay, I'm still going to hold it, so I will start to average down because I know we are on level 1 of our weekly move. Okay, let's assume we have gone up on level 2 and this pullback is happening on level 2. I won't do this year because I don't know whether the level will stop only at level 2, but because I know that we always will have level 2 after level 1, we always have a level 2. So that gives me the confidence to do this year. But if it's on level 2 already, about to start level 3, I don't know whether we will have level 3, because level 3 is something that is 50-50. level 4 is also 50-50, but level 1 and level 2 is always like more sure of it. So how do I enter the market if I am on level 2 about to start level 3? So what I will do is I will wait for this price to come above my 50, okay, and then respect my 50 and then continue. I will buy around this area. This is for confirmation of price. Okay, this one, so this is what I'm going to do. So I'm going to show you on the chart. Okay, so this is for my confirmation. I'm not going to do this here if we are already on level 2, if we have already exhausted level 2 and maybe hoping to ride level 3. I'm not going to do this here. There is no way I'm going to do that. I will wait for confirmation entry. I will wait for my confirmation entry, which I just showed you now. So I will show you on the chart. So this is what I'm talking about. You see, for example, this is on weekly now. Okay, this is on weekly. You see here on the weekly we have gone level 1, which is here. We have gone level 1, level 2. Okay, so on this, to ride level 2 is where I can actually do this here. After level 2, the other ones I will not do that. I will wait for confirmation. So this for level 3, for level 4. So now let's see how this actually happened here. Let's draw this, because this is level 2 already finished here, right? So let's see how I would have entered on here and on here. Okay, so let's go down to the daily. So what I will do here, so this is when the market have pulled back, right? So what I'm going to do here is I will find the particular bear candle, or where the bear started to pull below this 50 RSI, or where they started to break this our 50 moving average. Let me delete this so you can see it clearly. So this is where we started to break down. Okay, so what I'm going to do is I will draw that area. Okay, what I want is a break above this our 50 moving average, which is the blue line, and also above this particular bears that caused this break of structure that brought us into this particular bear zone. I want a break above them and then hold. So we break above them, we hold. So this will be my entry here. This particular area will be my entry. So I will always give up this first level. I want the first level to confirm itself. I will want this first level to confirm itself, to tell me that yes, that level 3 of the weekly levels is holding. So I'm going to give up the first level on the daily to trade on the second level of the daily. I will enter there and wait until I am out. So how do I enter? I will wait for this to break above this 50 MA, which have brought us into this 50, above this 50 RSI. So this first level of the daily, this first level of the daily must be confirmed. Okay, for me it has to be confirmed. Then when we now come down to this point, okay, this area, to start the level 2 of this daily, remember this is level 3 of the weekly, but level 2 on the daily now is where I'm going to be buying. And it means we have come above this particular bear that brought this into this our bear zone. We are above it, we are respecting here, and then we are now continuing, which on this, on a strong volume that also came above average. Then I will buy. So when I buy, I'm going to stay. How do I exit? I exit based on strength. Here I'll show you how I exit. I can actually, like, by the time we just go on the first level, come down second level again, like done with the second level and then enter the third level, I'll start to take my profit out. Okay, I'll start to take my profit out. Now I will show you how I normally exit all my position. So let's assume this is our RSI. Okay, RSI 50. Let's assume this is our RSI 50. Because I said to you that RSI is the strength indicator for me. Okay, so whenever we have our price break below this RSI, what I expect if the market is still strong is a bounce back like this. Then I'm not going to be out. I will still stay with the market. Or we break it, go down, not go down, like go sideways and continue. I'm not going to also come out. But what I don't want, okay, again, also we break it, then we just go up, okay, come down, but we didn't break this particular area. I am still there. I'm not going to come out because this move can also continue like this. Okay, so with all this, and the most important one is it gets here and bounce back, okay, to continue. But what I don't want to see, or what will happen and I will exit totally, is this. We break like this and then we now slide like this down, kind of we slide down, or we break like this and then come up, which I am still in the market, to hope it for it to go up, but it now break down, breaking this particular area on my RSI. Then I am out. Okay, so this is my exit. It shows that the strength is no longer there. The strength is no longer there, so I'll be out totally. So that is how I pull out. But that does not mean I'm going to wait until this happens. So when we start to, like, maybe run up the first level, I feel okay, let me take up some of my profit. I will be reducing my profit gradually until I'm totally out of the market. But this is what will make me to be out of the market totally. This is what I'm telling you. This particular patterns is what will happen on my RSI. Then I will be out of the market totally. So with that being said, I will also come back here. So let's assume I got in here. Now the market is now going. I can start taking some of my profit here, taking some of my profit here. We break this point, this place. I can take a little bit of my profit and then waiting to see whether it will break back to continue. You see, when we break here, you see, let me draw it. You see, we broke here and then slide down. Okay, I am out. Okay, I am out. We broke and slide down. If you watch here, what I told you here, we broke and then we slide down. I am out. It is not side. Okay, this is side. Like, we broke, go side, holding. That means holding before breaking up. Okay, this is different from this. Okay, so this one I am out. To wait again for the market to also go back up here, and I will now find. Okay, now let me explain to you this one. You see this one, after we go down here, we also came up here. to now break here. So this one caused a break of this structure. It caused a break of this structure, this particular one here. Okay, let me take away this. This particular price action broke here to cause a break of this structure. So if I'm to buy, I'm going to wait for this particular area that caused this break of this structure to be taken out. Okay, so I'm going to wait for price to come up and hold. But you see, when it came up here, it broke down, it didn't hold. Okay, and then we came up here, and always watch out by the time you come up for it to really hold, for you to trade the level 2, you will see that the MA20 have already come above this particular price, that this bear market, this bear zone have already been crossed by this MA. Is showing you some strength, that the strength is really coming back. So by the time this also gets in here on this candle, I will also enter. Okay, so because we have respected this area, I can see we have respected and then break this our MA10, so I will enter and buy. Then I will also stay and then be watching it, then looking at my here. Okay, now let's look at this place. You see this particular RSI price action here. You see what happened there? We broke, then came up, and then came a little bit down, but we didn't then continue. But we didn't break this particular area. We didn't break here. Okay, so as we didn't break here, I'm not going to be out. Okay, so just trying to explain more so you can be able to understand. Feel free to ask me a question. Actually, I'm doing this for my friend who said he wants to understand more about it. So I'll still be there and then be monitoring the market. Okay, you see here also it broke and came back, so it means the strength is still there. Okay, now you can see here this particular place. We broke and then we slide down, then came up. Okay, for this slide down, for this break and slide down, I am out. Even though we are still above this our 50 MA, I am out because of this break and slide down already telling me that the strength is lost. So I am out, totally, fully out of the market. So now I will now be waiting for it to reset and come up again. Okay, so now we start coming up, but you see what actually break here is here. I mean, if you look at here, the lowest is here, and what causes is this one. This is what brought it into this area, right? Okay, so this area need to be broken out, need to be taken out. This area need to be taken, and then I want this hour 20. But remember, with this now we have gone level 1, level 2, level 3, and level 4 almost on this hour daily, and you know we're already on level 3 of the weekly, so you should be very careful and at this area as well. So you now start to draw this one also. So you see, when we come up here, we are supposed to hold. When this our 20 MA comes up above this line, we're supposed to now hold here. This area is supposed to hold before we continue, just like if you watch out the other ones, like here, something like this. Come up and then hold, and then we break this our 10 MA to continue. But what happened here? We came there, instead of holding, we now fail, you see, which could lead to a total correction on our weekly levels. So I don't want to make this too long, so that people can be able to, other people who want to watch can be able to, you know, have the time to watch it. I don't want it to be too long. So this is how I trade. This is how I enter and exit. Okay, so if we are on level 1, after level 1 and then level 2 of the weekly, I can do this here, but after level 2 I don't do this here on level 3 and level 4. Okay, I wait for confirmation. Okay, so that's how I trade. Thank you very much. If you have any questions, feel free to ask me. Thank you.